Yeah, good morning, everyone. So we are seeing a negative trend across the world. US market has seen correction on Friday post reporting of strong employment data and decline in unemployment rate in the US, which was unexpected. So that has led to dollar strengthening a lot and also bond yield increasing. So all these factors are having impact on emerging market, including most of the Asian market, which are negative today. Apart from that, US has put up some sanctions against Russia, and this time it is on oil export from Russia to the other nations where India was getting a lot of oil from them. So the restrictions is on the oil company and also on the shipping lines, which were carrying those oil to the India and China. So that has also put oil higher, and it is up by almost around $4 as compared to Friday. So that is also likely to have negative impact on the companies like OMCs and refineries, and including Reliance Industries, where they do refine Russian oil, and that is likely to become costlier, or oil for the refineries will become costlier and can have some impact on the refining margins of these companies. So these company will also be under pressure. So overall seems Indian market is also likely to open on a lower end and continue to remain under pressure during the day. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap down opening, and we're likely to witness some sideways move during the day. On the technical front, last week also, we have seen a very strong selling pressure. Nifty was about down by almost 2.4% on weekly basis, which gives some sort of a cautious sign. On the technical front, weekly chart suggests that the stock has given the breakdown of upward sloping trend line and also manages to almost break the golden ratio of 61.8% of its previous rally, which comes to at around 23,435 levels. Now, looking towards the today's opening, we believe that the selling pressure is likely to be extended and which might take the Nifty towards a downside of 23,200 levels. For today intraday purpose, the first support is placed at around 23,270. Below that level, 20,200, 23,140 levels can be seen. Whereas on higher side, 20,500 will act as a crucial resistance levels. As long as Nifty doesn't give the breakout and sustains on the closing basis, we can't see more upside rally on the higher sides. Whatever the pullbacks we are likely to witness, that will be a short-lived, but the overall structure of a Nifty as well as on a bank Nifty is on a bearish side. Try to avoid a major long positions in such kind of a volatile markets. If you create any long or the short position, please maintain with the strict stop losses. Coming towards the bank Nifty, 49,000 is the initial resistance level. Above that only we can witness some sort of a pullback rally towards 43,340 to 49,340 to 49,500 levels. Whereas the support is placed at around 48,540 and 48,200. As of now, we are not initiating any buy or the sell call. Let the market sustains at the support levels and looking towards the at least first half an hour of our trading session. Accordingly, we will generate the calls. That's it from my end. I request the derivative team to take a call for.
Yeah, thank you, Swati. On the derivative front, importantly, Nifty is placed around 23,500 levels, which is a support area, but we are going to open gap down with about more than 100 points down. So yeah, we will breach that in the opening in terms of future. The next big support for Nifty is around 23,000 levels. So that does suggest some more pain can come in the first few hours of the market opening. But if you look at the other indicators, they do suggest that some sort of support buying will come in the later part of the session. So yeah, probably from 23,300, 23,200 odd levels, you can see some buying emerging for Nifty. and post that we might see a good closing. So yeah, look out for the same. The indicators are suggesting some positive bias towards the end. Um, from the call side, 23,500 should be closed above. If that is done, then you can see some more buying coming in up to 23,800 levels. However, the overall structure for the longer part of the week or so seems negative, and maybe as the week goes on, you will see more selling coming in. Um, from the stock specific front, we are seeing selling in most of the stocks. Banking as a whole has witnessed a lot of shorts, and a breakdown has also come in below the 200-day moving average. And we are seeing further selling in, even the private banks and the PSUs. So that will continue to remain negative. So that is one sector which can probably witness more selling, and the likes of Bank of Baroda, Canara Bank, HDFC Bank, IndusInd Bank, and Axis, they have witnessed a lot of shorts. So probably these will go down further. Yeah. So yeah, look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the news front, US FDA has classified Biocon Biologics Insulin's facilities in Malaysia as voluntary action indicated. This is marginal negative for Biocon. On the IPO front, the subscription for Lakshmi Dental Limited is opening today and closing on 15 Jan. We are recommending subscribe to the issue. The price band is set at rupees 428 at the upper end. Total issue size is of rupees 698 crore, of which fresh issue is of rupees 138 crore. Post issue, the market cap is expected at rupees 2,352 crore. The proceeds from the fresh issue to be utilized for the debt repayment worth rupees around 28 crore, and the capex plan is of rupees 69 crore. So if we look at the company's profile, Lakshmi Dental Limited is India's only end-to-end integrated dental products company that offers the comprehensive portfolio of dental products. The portfolio includes the custom-made crowns and bridges, branded dental products, which includes the clear aligners, thermoforming sheets, and aligner-related products as a part of aligner solutions, and pediatric dental products. It has 6 manufacturing facilities, of which 5 are in Mumbai and 1 is in Kerala. Lakshmi Dental has a reach of over 22,000 dental clinics, dental companies, and dentists. With almost, it has 20 years of operations in this business. It is one of the largest Indian exporters to the US and UK. Also, it is focusing on the B2B2C model, which is expected to support its future growth with strong R&D for product innovation and services. The company largely faces competition from the unorganized market in India, where it expects consolidation over the near to medium term. If we look at the valuation, the issue is valued at a PE valuation of 70 times based on the adjusted first half of FY25 annualized earnings, which we believe relatively high. The company is operating a business model which has no relative listed peers in the industry. If we look at the performance, it has delivered around 19% growth in its revenue between FY22 to 24, and healthy return ratios where the ROE is at 50% and ROC it is at 33% for first half of FY25. Also, it has delivered the consistent margin expansion on operating level over the last few years. The debt reduction of rupees 28 crore is expected to support the bottom line. And we expect the future business growth is to be backed by the favorable industry dynamics, company's potential expansion plans, and it aims to reach the global market. Thus, we recommend subscribe to the issue. Thank you.
Good morning. On the results front, HCL Tech would be reporting numbers today post market hours. On a constant currency basis, dollar revenues are expected to grow by 4.2% quarter on quarter on the back of increase in its product business. EBIT margins are expected to come in at 19.2%, a marginal growth of 62 bips quarter on quarter. Seasonally, it's a strong quarter for the company. Earlier, company had given guidance of 3.5 to 5% for FY25. So some of the analysts are expecting a revision on the lower end guidance in this quarter. And also, they would be keenly looking at demand outlook for ER&D services. So in the last quarter, the management had given a positive demand outlook, and thus the stock is trading at a 28 times FY26 expected earnings, a little ahead of TCS and Infosys. So one should remain cautious and take calculated risks. Thank you.
Good morning. Today one IPO will be listing. The name of the company is Standard Glass Lining Technology Limited. We have given subscribe rating to this IPO. Details of the IPO are like issue size is around 410 crore. Issue consists of OFS aggregating up to rupees 200 crore and fresh issue up to rupees 210 crore. Market cap post issue will be 2793 crore. Talking about the company, Standard Glass Lining Technology Limited is a leading engineering equipment manufacturer in India, specializing in serving pharmaceutical and chemical industries. It offers a wide range of products, including glass line, stainless steel, and PT FE line equipment, along with the end-to-end solutions like design, installation, and turnkey project management. Based on the peer comparison, Standard Glass Lining Technology Limited has showcased remarkable growth with a 50% CAGR in the revenue. Its EBITDA margin of 17% reflects strong operational efficiency, outperforming the industry average of 13%. The company's gross block turnover of 5.9 times indicates excellent utilization of fixed assets. Its ROCE of 17% and ROE of 15% are competitive. Its PE ratio of 47 appears reasonable compared to the industry average of 58. Considering its high growth potential, efficient operations, and reasonable pricing, we have given subscribe rating to this IPO. Thank you.
Good morning, everyone. On results front, Avenue supermarket numbers were below expectations, wherein revenue grew by 17.5% Y on Y and 10.8% Q on Q. EBITDA margins came in at 7.9 against expectations of 8.5. Stock is trading at PE of 67 times FY26 EPS and long term remains positive. Just Dial reported numbers below expectations. Revenue and margins were below expectations. Revenues came at rupees 507 crore, grew 0.9% Q on Q, and EBITDA margins came in at 30.1 against expectations of 30.6. PAT came in at 131 crore against expectation of 153 crore. Stock is trading at PE of 16.5 times FY26 EPS and long-term outlook remains positive. Thank you.
Yeah, that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, one can buy gold around 78 200 with a stop loss of 77 900. On upside, we are expecting 78 600 800 levels. Whereas in silver, one can initiate a buy around 92,000 with a stop loss of 91 300. On upside, we are eyeing for 93,000 and one can book profits around those levels. Whereas in copper, prices can witness some profit booking. So selling around 829, 830 is recommended with a stop loss of 834. And on a downside again, 824, 822 is the level where one can book profits. And zinc looks positive. Buying on dips around 272 is recommended with a stop loss of 269. Upside we are expecting 275 to 77. And in crude oil, prices already opened gap up, and one can buy on dips around 66.50 with a stop loss of 65 50, and upside it can test 6800, so watch out for that. Natural gas also one can buy around 350 with a stop loss of 340. Upside we are expecting 365 370, so buy on dips is the strategy. That's it from us. Thank you very much.